Almost every trader uses the RSI the exact same way. Above 70, they call it overbought. Below 30, they call it oversold. But what if I told you that's not the most important thing the RSI can show you? There's something inside the RSI that most traders never even notice. In today's video, I'm going to show you how to read the market structure inside the RSI and how small shifts in that structure can warn you that the market is about to change direction. So stay with me until the end. What is market structure? Before we talk about RSI, we need to understand one simple idea: market structure. When traders look at a price chart, the first thing they check is the sequence of highs and lows. In an uptrend, price usually follows a clear pattern: a high, then a pullback that creates a higher low, then another push upward that creates a higher high. So the structure becomes higher high, higher low, higher high. This is what a bullish trend looks like. Now let's flip the situation. In a downtrend, price usually forms a low, a small pullback into a lower high, then another drop into a lower low. So the structure becomes lower low, lower high, and lower low. This tells us clearly that sellers are in control. This concept, reading highs and lows, is the foundation of market structure. But here's the part almost nobody talks about. Most traders only apply this idea to price. Very few traders realize they can apply the exact same concept to RSI, and once you start reading market structure inside the RSI, momentum becomes much easier to understand. Understanding a structure on RSI. Now let's look at RSI in a slightly different way. Instead of thinking of RSI as just a number between 0 and 100, imagine that RSI is a small chart of momentum. Just like price, the RSI line also moves up and down. It creates peaks and valleys, and those peaks and valleys are actually highs and lows of momentum. So, if we observe RSI carefully, we can also see a structure like higher highs and higher lows, or lower highs and lower lows. And these patterns tell us how momentum is evolving in the market. Let's look at a few examples. Example number 1, bullish structure on RSI. In this chart, price starts moving upward. On the RSI, we see something interesting. First, RSI pushes up and forms a peak. Then market pulls back and RSI drops a little. But notice something important. The RSI does not fall very deep. Instead, it forms a higher low. Then the market moves up again and RSI creates a higher high. So now the structure on RSI is clear. Higher low, higher high. This tells us that bullish momentum is building. And when we look at the price chart, we can see that price is also trending upward. So the RSI structure confirms the strength of the trend. Now let's look at another situation. Example number 2, weakening momentum. In this chart, price is still moving up. At first glance, everything still looks bullish. But when we look at the RSI, we notice something different. The RSI makes a high, then price pushes higher again. But this time, the RSI fails to make a higher high. Instead, it forms. This is a very important signal. Price is still rising, but the momentum structure inside the RSI is weakening. This often acts as an early warning. Many market reversals begin exactly like this. Price still looks strong, but the momentum behind the move is already fading. But the story does not end here. Let's look at another important example. Example number 3, structure shift. This chart shows a clear shift in momentum structure. The market has been falling for a while, and the RSI keeps forming lower lows and lower highs, confirming bearish momentum. But then something interesting happens. RSI forms a low, price moves up a little, and RSI forms a high. Then the market pulls back again, but this time RSI does not create a lower low. Instead, it forms a higher low. This is the first warning that momentum may be changing. After that, RSI moves upward and breaks the previous high. Now the structure becomes higher low, higher high. At this moment, the momentum structure inside the RSI has shifted from bearish to bullish. But notice something important. On the price chart, we still don't clearly see a bullish structure yet, and this is exactly why this signal matters. This signal is actually much stronger than the warning we saw in the previous example. In the previous case, the RSI only showed that momentum was weakening, but here, the structure of momentum has actually changed. And when the structure changes like this, it often signals a much more significant shift in the market. In many cases, a strong upward move begins shortly after. Using RSI structure in real trading. Now you might be wondering, if RSI shows a structure shift, should I enter the trade immediately? The answer is not yet. Think of an RSI structure shift as an early signal. It tells you that buyers might be taking control behind the scenes, but to take a high probability trade, we still need price confirmation. Look at this example again. Here, the RSI shifts from bearish to bullish. Now take a look at the price chart. Instead of entering immediately, we wait for a clear signal from price, such as a breakout above a resistance level or a strong bullish engulfing candle. When the RSI structure shifts and the price action align, something important happens. There is a strong confluence in this area. Confluence simply means that multiple signals are pointing in the same direction, and that usually leads to a higher probability trade. So this is the point where a buy trade can make sense. For risk management, we can place the stop loss slightly below the recent swing low and use a 1-to-2 risk to reward ratio for the take profit. And as you can see in this example, the price moves upward and eventually reaches the target. Now let's quickly look at the bearish scenario. Here the RSI structure shifts from bullish to bearish. The RSI forms a lower high showing that momentum is weakening. Then price confirms the move with a break below support. When the RSI structure and the price action align, we get a strong confluence, this time for a potential sell trade. At this point, traders may consider entering a sell position after the breakout. For risk management, the stop loss can be placed slightly above the recent swing high, and the take profit can be set using a 1-to-2 risk to reward ratio. As you can see in this example, the price moves downward and eventually reaches the target. Alright, that's it for today's lesson. Next time you open your chart, take a moment and look at the RSI a little differently. Don't just focus on the 70 and 30 levels. You might discover that this simple indicator is telling you much more about market than you previously realized. If you found this lesson helpful, make sure to like the video and subscribe to the channel. And if there is a specific RSI topic you want me to cover next, leave a comment below. I read every comment and your idea might become the next video. Thanks for watching, and I'll see you in the next one.